So I want to talk a little bit today about missed mortgage payments and foreclosures. We all know that you have a contract. If you get a mortgage through a lender, you have a contract with them. They agree to put out a whole bunch of money up front, and in return, you're going to pay it back with some interest, right? So that's a contractual obligation you have. So these days, we do have some people that are worried about making their payments, and even though there are forbearance programs and things like that, still ultimately at the end of the day, you're going to have to make your payments. So when are you at risk? So like as of May 2nd, more than 4 million mortgages were past due. And in the news, that looks like a big deal, and it is a big deal. Don't get me wrong, I don't want to have my mortgage past due, and you probably don't want yours past due either. But guess what? We have some forgiveness out there, and we were all told early on, make sure you hold on to your cash as long as you can, because we don't know how long this is going to last, what the repercussions are going to be, will we ever work again, all these things, right? But generally speaking, you miss 2 or 3 payments, you're probably going to get foreclosed on. You missed 1 or 2, you're probably not. Now, one of the things they can do, if you're just late with your payment, you could just pay a late fee. But I'll tell you, if you've had your mortgage for a while and you've paid on time and you give them a call and you say, you know what, I think I'm going to be late on this payment, they're probably going to be willing to waive that late fee if it's not a regular occurrence and if you've been a good customer. If you miss 1 payment, you're probably not going to have any major issues, although they could report you to the credit bureau if you're 30 days late. And that's the thing, you're not going to get reported for being late. You have to be 30 days late to impact your credit rating. And of course, that's your credit score. And the higher your credit score, the bigger you're going to be impacted. If you're already a 620, there's probably enough things on there already that this one isn't going to make that much difference. But if you're an 820 and you have this, then that's going to bring you down. It's going to hurt you more than you might hope for. And by the way, that impacts all your stuff, interest rates on credit cards, home loans, even insurance. So like I said, if you're just a little bit late, you're going to pay a late fee, and it has to be 30 days late. And if you believe it, you're going to miss a payment, you should contact your lender and try to see if they'll work it out. A lot of times, just a phone call will really get you a long way. And then if you do fail, if you decide you're just not going to make your payment, then guess what? That lender is probably going to send you a notice of default. Now, a lot of people look at pre-foreclosure activities, listings, and this type of thing is when somebody's received a notice of default for missing a payment. But I can tell you that you're fishing for something that's pretty rare if you just go into the NOD, because there's a lot of NODs from people that by far and away, most of them end up resolving it and paying their mortgages. Very few NODs actually end up going to foreclosure. And part of the reason is, even if you're 3 or 4 payments behind, the lender doesn't want the house back. That's not their job to own houses. Their job is to float paper and to have cash flow. So if you communicate with them, know that loan staying solid is a benefit for both you and the lender, and you both share that common interest. So I hope you found that helpful. Thank you.